Okay guys, today's the 9th of June, which is Thursday. So yeah, just wanted to follow up on the last video I did, which was just talking about the S&P and the potential major correction that we're going to see. Now, today's Thursday, so it's been about a week, and we haven't seen anything. Still see some more strength in the market, which is talk about that a little bit in a minute, but from a technical perspective, let's have a look at what's happened. So I was looking at the pivot top here, right, as being a potential reversal area. Now, I did get into the trade. I got stopped out, right, which is perfectly fine because that was something that I had anticipated. So, and that's the important thing. And I need to probably do I probably need to do more of a video on kind of a lesson around this, because I got into the market knowing that I could be right or wrong, right? So if I was going to be wrong, I knew why I was going to be wrong, and if I was right, I knew why I was going to be right. So, and the fact that I end up being wrong, which is fine, because that was a potential possibility that the market would continue higher, right? Because you got to understand, this is not exactly a free market at the moment. It's not exactly, it's not operating according to supply versus demand, concept and all that stuff. So, but when I said to people, I said, if you look at it from a risk reward perspective, there was nothing wrong with the trade. Because what I essentially did was I was putting this much at risk, for example, right, in to gain this much potentially. Because if we did get a correction, you got to look at past price action, because it gives you a lot of clues, right? If I had repeated the same trade, say for this area here, which I was talking about last time, and this one here around this area here, they did work out. So you got to look at the probabilities of that, right? Because this whole game is all probabilities, right? It's all numbers and probabilities. It's not, you're not supposed to be right all the time. You're supposed to probably be wrong half the time, right the other half. But then you combine that with money management, that's really all comes down to money management. So yeah. Finishing that up now. So what the market has done since was, we did get some corrections, and actually, no, we didn't. We did get some, the market did kind of tease us a little bit, but, it's broken out here, and we've closed above the pivot high there. So it looks like we're heading for, that 213 area, I think, which is, a major high here. That's a major resistance zone there. But the real area we're looking for is to see if the market test is this level here, right? That's the historical high, which is 2137, based on that. Could be a little bit lower, which I think it's going to likely head up to. So if we breach this level here, I'm pretty confident that it's going to keep heading up to that level there. Now the question is this going to go even higher than that, right? Which is, it's a possibility, but this is where you're going to be careful, right? This is where the market tends to try to trap all the bulls in, right? Now, if the market does head, I don't know where the market's going to go, right? But whichever direction it goes, how high it goes, there's going to be some sort of correction, right? It has to correct. And it's not just because, based on technicals, it's going to correct or whatever the case may be, but there will be some sort of correction, whether it's artificially created or natural. There's going to be a correction. The market kind of needs to keep, people honest, basically, right? So that's going to happen regardless. So you're going to be careful of that. So if you're looking to get in long, whichever level you get in, you're going to be careful of where you get in and how long you're holding position for, and just managing the trade, right? So if I were to get in, I'd be managing the trade really, really cautiously, with trailed stops. But you're going to be really careful, because if we will see some sort of correction, but it's going to depend on how high this market goes first. So I think initially we're going to head towards that 213 area, at least touch it. If we close above that, then who knows what happens next. But got to be really careful with this one, and you got to also understand that this, you got to look at the fundamentals of this, and then look at the chart. So the chart will tell you what it's going to do, but if you look at it from, you're going to do your research. If you look at it from fundamentals, what's happening in the real world versus this, these don't match up, right? The health of the US economy is not doing good at all, right? And secondly, you've got the bond market, right? Now the bond market's actually still going higher, which is contradicting this, right? Because generally when the bond market goes up, the stock market goes down. And when the bond market goes down, then the stock market goes up, right? It's all got to do with yields and stuff like that, right? Because if the yields are low or high, whatever it is, then investors will be moving their money between the stocks and the bonds, right? So that's how it works. But we're not getting that. So one of them is going to be, let's see again. Generally, the smarter investors, right, generally invest in the bond market. That's where the smart guys are, right? Now there are smart people in the stock market as well, but generally the people that play with the bonds are generally more, are in the know, right? They know what's going on, right? That's just how it is. So you should, if you really want to know what's going on in the economy, you should really be watching the bond market. That's probably where you'll get your more, your source of truth, I guess, because the stock market's kind of being manipulated all over. I guess the bond market is the same too, but again, there's a lot more smarter investors from all classes. So yeah. So I'll leave it at that. I thought I'd just do a quick update, and I'll just say that. So I got stopped out. I can't remember how much in terms of dollars it was, but there wasn't that much risk. So if I saw that same trade again, I'd get in again. So. That's the whole point about trading. It's just you find you have a strategy or a setup, and if you back tested it and it's proven to return if it's proven to be profitable over a long period of time, then it doesn't matter if you have 5 or 6 trades in a row that are losers, right? Because you've back tested this. That over a long period of time it's profitable, or whatever the case may be. So you should always be just getting involved no matter what. That's how you get those results. And when you get those results, then you can add that to your statistics, and then you just refine it as you go, right? If you get to the point where it's like 20 straight losses, then you're gonna have to probably go back and revisit and go, well, what's going on now? Because it could be seasonal. There will be periods throughout the year where that particular strategy or setup just doesn't work, right? So I'll leave it at that. Have a good day. Talk to you soon.